Thanks for staying with us on Point. China stocks ended mixed on Thursday as gains in financial firms offset losses in resources companies. This after Beijing vowed to stabilize commodities prices, which it deemed unreasonable. It also sought to prevent the pass-through to the customer. Those comments drove prices of commodities, including steel and iron ore, to extend recent losses after surging this year on the back of post-lockdown recoveries in demand and easing global liquidity. Digital currency and blockchain-related stocks also pulled back after a cryptocurrency slump. Japanese shares ended marginally higher on Thursday as gains by chip-related stocks tracking US peers offset losses in cyclical shares. The Nikkei share average rising 0.19%. The Shanghai Composite Index dipped 0.1%. Wall Street's main indexes closed lower on Wednesday after minutes from an April Federal Reserve meeting showed participants agreed that the US economy remained far from the central bank's goals, with some eyeing a future discussion of tapering its bond buying program. The Dow Jones Industrial Average fell 0.48%, the S&P 500 lost 0.29%, and the Nasdaq Composite dropped 0.03%. Let's take a look at the rest of the markets. Owen Gomo from Nkunzi Wealth joins me now. Thanks so much for your time on SABC News this afternoon. So talk to us about what effect that announcement from Beijing did to commodity prices, metals and the like.
Thank you so much, Zinga. That was an interesting response from the markets. Initially, there was a knee-jerk reaction where the commodities pulled back a little bit because there's speculation that the government of China might start to sell some of their strategic reserves in minerals into the market to try and quell the pricing that's getting out of hand right now as China aggressively recovers from the COVID. So we saw an initial dip, but the pricing sort of stabilized, and we are starting to see guys buying back in the markets again because the demand at the moment relative to the supply that is prevailing in the market is certainly far much more than the markets can supply, obviously because of the current curtailed operational environment due to COVID.
Speaking of dips, what's happening to cryptocurrency prices and stocks?
Yeah, it's an interesting one. The crypto space, we've seen a big correction in the cryptos, led by a major fall in Bitcoin. With Elon Musk being touted as the reason for the correction in Bitcoin. Starting to think that people that are trading Bitcoin at this stage have got a lot more pressure in terms of making a decision as to whether or not they're going to hold their positions or not. So Elon Musk having promised a few weeks ago that he might, together with Tesla, consider accepting cryptocurrencies for purchases of their vehicles. Guys who play in this space started to believe that cryptos could be actually used effectively to transact in as much as we use money to transact when we buy services and goods. And he went home one day, he had, that evening, changed his mind and he decided, you know what, we're not going to accept crypto anymore. So for that reason, we've seen a big correction, some of the cryptos losing over 28 to 35% in a few days. And I guess, like I've always said, crypto is for those people that are not faint-hearted.
We saw those, stress yesterday of people who were trading Bitcoin as the price went up and down, and people who really believe in it always saying, just carry on holding, ignore the noise. And then people who don't believe in it saying they don't want to buy something that can change depending on someone's Saturday Night Live appearance. Let's talk about more recoveries. Yeah. Let's go over to Europe. In London, we see the FTSE bouncing back from its worst daily performance in a week. What was driving that?
No, look, we obviously, when we play the markets, we're playing a relative game. We look at what's happening elsewhere in the world. The other markets have been relatively resilient. The biggest concern at the moment that's doing the rounds in trading flows is the issue of interest rates. We saw inflation pushing up here at home, coming in at 4.4%. And we saw inflation in America last week also coming in at about 4%. And people are starting to worry that we're going to see an unwound in the interest rate environment that is very accommodative at this stage. And we might see interest rates start to go up. I don't think it happens now. But obviously that gave the market an knee-jerk sell-off reaction, like I was explaining about Bitcoin earlier. Markets sell off, with anticipation of higher rates. But then again, guys go home and they think differently, and they think, you know what, maybe an interest rate reversal is not going to happen soon. So they start buying the market once again, Anzinga. So we saw the FTSE recovering with some of the big dual-listed names there in London pushing the indices out there, as well as recovering the commodities also playing a role in pushing some of these markets higher overnight.
Okay, if we're talking about recovery, we go to the United States. Those Fed minutes released, $2 trillion economy, only creating around 226,000 jobs. Concerned that maybe economic recovery in the United States may take longer than anticipated.
No, look, I mean, that number is an adjusted number, it's a short-term number. But I think America's jobs creation post the COVID recovery has done well. I mean, in some segments, you're having employers having to put up it's something that we have to get used to. The economy tries to recover from COVID. We are seeing people still being hesitant to go back to the office. We are seeing people still, some of them accepting to go back to the office. There's conversations around vaccinations, and, people are complaining that the vaccines are not working. So it's not helping the guy trying to make a decision to go back into the office. But I think America has done well to bring back people into the office, Nzinga. So I think that this little dip is just a moderate assessment in my view. The economy in America is totally bound to do better over the next few months, in my humble view. But the big question that remains is the interest rate environment in America. At what point or when does it get hostile? When do we start to see Jerome Powell pushing up interest rates in the USA? That's going to be the most important question now and in the near future as we consider getting more people to go back to work.
Speaking of interest rates, we're waiting for our MPC announcement at around 3 o'clock. We also know that we've just seen that warning from Moody's around South Africa's economy and the many challenges that there are. Also that quite high inflation number that came out from Statistics South Africa. What's actually happening with South Africa, and how are investors feeling about team or brand SA?
No, when we look at the countries and assess the country, we need to understand that there's many different investors with different views about South Africa. There's a camp that says South Africa has a great chance, and that's why you've seen the rand strengthening post the recent political activity in the country. The changes in the ANC and people being told to step aside. People bought into that, saying we are now starting to implement changes that might see the economy do better. We're now seeing the ANC being decisive. But then there's some people that are saying, let's let the numbers do the talking. The economy is not doing well. We're over-indebted as a country. Where we are going in the next few years, we'll have the national debt matching our GDP, which is not going to be great because it increases interest rate costs and it increases our risk that we won't meet our GDP growth target. So there's those camps. But I think that I choose to stay on the positive side and hope that we'll turn the corner at some point soon and the economy will start ticking up better.
Owen Gomo from Nkunzi, well, still so much to discuss, but we've run out of time. Thanks so much for your time on SABC News this afternoon. After a short break, my colleague Mbongeni Mutwa is going to come to